All right, sorry about that. Apparently with no sound. Can you guys hear?
No, still not.
Nothing.
Yeah, now they can.
Okay, sorry. Sorry, we had no sound there for a second. We got it back here. Okay.
Thanks.
U.S. markets were under pressure yesterday after parliamentary votes in Cyprus on the on the bailouts there. It received no votes on the day, so the markets continued to sell off a little bit more intensely. Europe was the euro was tanking a bit there on the back of that, but as soon as the ECB came out and reiterated its position that it's going to provide liquidity to Cyprus, within the existing rules, it started to stabilize, and we really pushed higher from there, and actually had a decent finish to the session. My personal opinion is that this is the kind of setup that can happen in a market that like we're in at the moment, that will potentially set a squeeze up for us. The fact that you have really bearish news, a lot of the bears will really start to punish into some shorts. You'll get some guys that'll lighten up on the back of that, and when there's no follow through to the downside, a couple days later you can really potentially squeeze. So I think that's something that we need to watch out for over the next few days. I don't see any reason why we couldn't necessarily trade higher. All right, Asian markets were a bit mixed, but I think China and Japan were very, very strong. No real reason I think that China was exceptionally strong. I think except for one of the analysts there that everyone follows, I've forgotten his name now, threw an upgrade there and said that this week it was going to turn around. Markets were going to regain losses in China over the next week. Other than that, no real news. But resource stocks were another laggard, continue to be a laggard on the market there in Asia today. You can see that they continue to get beat up on the day. I think that analyst's name was Tom DeMark, now that I remember it. Anyway, a very interesting action, but resources very, very weak, and it's not specific to South Africa, which I think is really important. Even though we've got the Eskom problems and all the other issues, we've got to realize that this is kind of it's a global sell-off in resource stocks over the last little while, which I think we front run a little bit. So, all right, let's look at today. We've got a lot of stocks going ex-div on Friday, so today's last day to trade on Imperial, Liberty, Bidvest, First Rand, MMI Holdings, MTN, and RMH. There's a couple big ones in there today, so something that we need to pay attention to. Obviously it's going in ahead of closeout, or on the day of closeout, so we've got a lot of could have a lot of things affecting some of these stocks today. Impala's was asked to reduce power, their spokesman said, in the last couple of days. So I think that's something that we've got to continue to stay on. As I've said before, in my mind, the real reason for all the Rand weakness has been because of Eskom and because of the worries people have about it and its ability to not only meet electricity demand but financial obligations without increasing tariffs significantly. All right, we got a lot of data out today. We got SACPI at 10. Later we've got UK jobless claims. BOE will release their monetary policy minutes, and then we see the ILO unemployment rate. At 12 o'clock, we've got closeout, which is now a 15-minute ordeal, where we basically have a big auction for 15 minutes. I'd encourage everybody, especially the guys that are trading intraday, to get their books really light. We hear the open interest is really big. I think upwards of 70,000. Sorry, 47,000. Okay, so but still reasonable open interest. So it could be a big auction. Make sure you're light going into that. And later in the States, we've got mortgage apps. The UK Chancellor Osborne is going to speak. We've got the interest rate decision here locally. Expected no change. We've got consumer confidence out of Europe, and then we've got FOMC rate decision in the States as well. So hell of a lot going on today. Some rather big things. I think locally, I think what she says afterward could be really important. Right now, to me, we're at a very big inflection point in the rand. If we break down below 928, I think things could really get ugly in the short term for the rand. But if hopefully we can hold this level. We'll see what happens. All right, let's jump into the maps. Okay, the first thing I want to look at is Xara. If you look here, this is one of the ones that has held up surprisingly well in the face of a lot of adversity it's had recently. But really important here, you can see there very, very clearly defined trendline support at 160 rand. This one, like I said, it's held better than the others. And outperformed recently, but nevertheless, big level here. If we get below 160 today, I personally am probably going to be looking to put out a short, just because looking for any bit of short exposure I can find in resources that I think is reasonable. This one I think could possibly be that one, but watch it closely today. If we get below 160, it could be an interesting play to the downside, with a target potentially all the way to 140 rand. All right. Well, next one we'll look at is Kumba. I'm going to actually jump back a little bit further here into a 2-year and see the same sort of thing as Xara, obviously over a shorter term. But you can see here we're really coming into trendline support on Kumba. I would say if you really put it to the bottom end of that wick, that $480 is going to be the sort of right around that level. This one, you can see here the last kind of week, it's really been annihilated. I mean, I think it's traded off about 80 rand over the last 5 trading days. So really important to kind of find a decent level to try to trade around on this stock. 480 would seem to be maybe a decent place to nibble, but I think the stops have to be tight, as this thing's just been obliterated. All right. Next one I want to show is Naspers. I'll actually show a 30-day, and what I wanted to see here was we've got this head and shoulder pattern that's happened over the last couple weeks. It's actually quite clearly defined, but the target is right down here, sort of toward the bottom of the range, somewhere near 580. I mean, you could put this level here, up here around 581 if you wanted to, but between 578 and 581 is the target I would look for Naspers. They've got Tencent has earnings today. I think they're out at 2 o'clock in the U.S. 2 o'clock our local time, which is about 8 o'clock in Asia there, and very important to watch out for that if you are trading Naspers. As Tencent's probably going to be the biggest outlier for them. I think we had some numbers on them earlier, and I'll try to get back to you with the numbers out of Tencent and what they're expected there. All right, the other one I want to look at here is Remgro, and I'm going to back it up here a little bit and just show where I think we've pulled back off of highs. Obviously, we had earnings yesterday out of Remgro. 169 is really kind of the top, the where we broke out of resistance, and resistance now becomes support right here around 169. So, if you're looking to get involved in a stock like this, you want to start playing longs on support, buying some defensives. Remgro around close to 169 would probably be a nice little nibble. All right, the next one I want to look at is INL. We had talked about this before. We had thrown this level out right before reweighting at 68.50 as being support. and maybe not a bad place to have a nibble, but we've broken through that. Chart still looks very bullish, so we're still, in my mind, we're still looking for support levels, and I would look at right around 66 Rand on trendline support for INLs. If it gets below that, then all of a sudden the chart's not looking quite so bullish. So if you like INL, you're looking for exposure there. Right at $66, you can see there very defined trendline support. That's where you're going to want to look to nibble. And the last one that I'm going to show here is Tiger Brands. And I just wanted to show here. I mean, this is a chart we haven't looked at in a while, but right around $290 is really where support was. You know, we caught that nicely a couple times. I really would peg the support between somewhere between that little risk range there. That little band is about 286, 287 up to 290. That's probably where you, if you want to take a long here, where you're going to want to look to enter. It's really defended this level well the couple times that we got down to it, and we haven't always touched it, but we've gotten very close to it a few times. It's been a good buy every time it's been down here. The one thing that I do have in my mind, just as to caution me a little bit about this, is just the fact that it continues to come down here and test this level. So I think I think it is worth a nibble, but if we get below, if we get on a closing basis, if we break trendline support, or sorry, not trendline support, a horizontal support here around $286, then I would look to potentially get out. And that's it for today, guys. Thanks a lot.